Welcome to Matters Financial and Geopolitical from a Frontier, and I trust the week's gone well. Looking forward to the weekend, as am I. My home thoughts really have been on security and terrorism because it doesn't take much to work out why. And I found an old copy of The Secret Agent by Joseph Conrad, and that novel deals broadly with the notions of anarchism, espionage, and terrorism, so I'm going back to it to see if it holds any clues to what's happening currently. I was thinking of Kabir, my little nephew, and his sister Mira, and I went back to some quotes of Kabir. Wherever you are is the entry point. If you don't break your ropes while you're alive, do you think ghosts will do it after? Political reflections. Obama affirms US backing for Japan in any conflict with China. Obama declared the policy of the United States is clear. The Senkaku Islands are administered by Japan and therefore fall within the scope of Article 5 of the US-Japan Treaty of Mutual Cooperation and Security, and we oppose any unilateral attempts to undermine Japan's administration of these islands. A very definitive comment. US officials have made similar statements previously, but Obama's unequivocal backing for Japan in any war with China will only further fuel the tense situation surrounding the islands and harden Abe's refusal to even concede that a territorial dispute exists. At the same time as he has deliberately stoked up a confrontation, this is from an article in Global Research, with Russia over Ukraine, Obama is giving the green light to the right-wing Abe government in Japan to take a more belligerent stance against China. And I, for one, did not expect a twin-pronged approach, a pivot both to Asia and China, of course, and a pivot to Russia and Ukraine. So clearly we're in interesting times. I wrote about this on the 2nd of December when I said the pivot to Asia bears its fangs. I was referring to the Air Defense Identification Zone which China declared and the US response to that declaration, which was to fly 2 B-52s directly into it. And I said then that kind of message is incontestable, and I think President Obama's comments are as incontestable as that. I said then, the US probably feels it holds a decisive hard power advantage at this moment, and given that the trajectory is one of gradual erosion of that decisive advantage, it leads me to the view that this pivot to Asia has a logic and momentum of its own. And I said, therefore, I see the US being increasingly determined to press its advantage, and it's apparently so in two different geographies. I'll put up The Snake Again by Ai Weiwei, which for me best symbolizes the policy of containment, or as the Chinese called it, the policy of trying to cage an emerging superpower. I'll put up a photograph I found of Abe Shinzo and Barack Obama having sushi, but it seems they were having some sake as well, which is a very fine drink. Ukraine crisis. Putin warns of consequences after 5 pro-Russian militants are killed in Sloviansk. And as I said, I did not expect a twin-pronged US approach, taking the pivot to Russia, Ukraine, and to China, Asia at the same time. The US Secretary of State John Kerry has accused Russia of distraction, deception, and destabilization in eastern Ukraine. The Economist, last sentence in an article, and in it says, no side is winning. Hopes of building a new country from scratch are drowning in blood. I concluded by saying if there ever was a justification for the R2P rule, this is it. Prime Ministerial candidate Narendra Modi prays in front of a statue of former politician Madan Mohan Malviya during a rally in Varanasi. This is a photograph from Agence France Presse. He's going to win this thing lock, stock and barrel. Angel Jones, who was the convener of the homecoming revolution that I attended in London, tweeted this morning, the first time I've seen this, an ANC poster in Chinese in Cyril Dean Johannesburg. Time has a breakdown of its 100 most influential people. 27 of them work in the arts. Coming to the currency markets, the euro is at 138.32, dollar index 79.77, Japanese yen 102.36. Consumer prices rose 2.7% in April from a year earlier, the biggest jump since 1992. Of course, pumped up by a sales tax increase in a year of unprecedented stimulus from the Bank of Japan. But consensus estimates are that this will now start to fall away. The pound is back above 168 at 168.06, 168.42 on April 17 is the immediate objective. That was the strongest level since November 9, and once we push through there, I'm looking for 173.50. The Aussie 0.9275, the India rupee 61.125, fell 1.4% this week. I think it's a buy on retracements on a conclusive Modi victory. South Korean won 1039.85, the Rial 221.18, that's improved. The Egyptian pound just below 7, 699.56. The South African rand 1062.19. High producer prices in South Africa leading to some concern that a rate hike might be imminent. China's Purchasing Managers Index for manufacturing was 48.3 in April, compared with 48 in March, below 50, signaling a contraction. Dollar index 79.77. I'll put up a 3-month chart. For me, we got to get up through this 80.16 and 80.50 level. But I looked at some longer term charts, and there's strong support below here that's been developing. So it's quite interesting. And as you get a compression in the trading range, there is always a likelihood of a big breakout. So I'm looking at that all over again. Euro dollar 138.32. Draghi desperately trying to keep a lid on the euro, and quite successfully so far. Made a number of comments that the European Central Bank might start broad-based asset purchases if the inflation outlook worsens, as he prepares the ground for one of the most radical policies in the ECB's history. The objective here would not to be to defend the current stance, but rather to increase meaningfully the degree of monetary accommodation. The Governing Council is committed unanimously to using both unconventional and conventional instruments to deal effectively with the risks of a too prolonged period of low inflation. Inflation in the 18-nation currency bloc slowed to 0.5% last month, the weakest pace in more than 4 years, and well below the ECB's 2% target. However, Draghi is of the view that while inflation will remain low for a long period, we see it gradually rising back to 2%. The delay in it is largely explained by the impairments in the transmission mechanism that lengthen the lag between our accommodative policy stance and price developments. I think he's talking unconventional monetary stimulus up. I don't think he's ready to pull the trigger. Interesting article in the New Yorker. Department of Aviation Game of Thrones, how airlines woo the 1%. On one of Singapore Airlines A380s, a couple travelling in first can combine 2 suites to create an enclosed private room with a double bed and sliding doors. On some flights on Emirates, first-class passengers who make a mess of the treats in their personal minibar can tidy up with a shower before they land. The modern aircraft seating industry is highly specialized. The number of manufacturers is small, in part because creating new seats is so complex that moving from conception to installation takes years and entails large financial risks. It also poses unique design challenges, since a premium class seat has to create an impression of opulence in what is actually a noisy and potentially nausea-inducing metal tube filled with strangers. If you checked into a luxury hotel and were taken to a room the size of a first-class airplane cabin and told that you'd be sharing it with 11 people you didn't know, all of whom would be sleeping within a few feet of your own skinny bed, you wouldn't be thrilled, especially if you're paying $20,000 for the experience. Singapore's attendants, I learned, were made famous by the airline's early 70s motto, "Singapore girl, you're a great way to fly." and they still wear batik sarong kabayas designed in 1968 by Pierre Balmain. And I own a jacket by Pierre Balmain, amazingly enough, which still fits me. Gold, I'm going to put a 1-year chart, ticked a little bit higher, last at 1291.77. I still see a move through 1250 and eventually down to 1,000. Crude oil, 101.98. It's toppy, but it's not in nosebleed territory, which is around 104, 105. I think it's going to dip below 100 in particular, because I think China's slowing down more than people are accepting. Coffee futures have surged to 92% this year as of April the 23rd. And volatility on the futures for the bean surged to the highest since 2000 this week, according to Bloomberg data. Due to the price swings, coffee futures are a bad, bad boy, Citigroup Smith said. The fluctuations are more than most people can handle. I'll put up a chart of coffee, and then also a photograph of a view into the dining room of the El Celler de Can Roca, which has broken as much gastronomic ground as Ferran Adria's El Bulli, according to the Wall Street Journal. India rupee, I'll put up a 1-year chart, 61.105. I'm looking for a long entry level on a decisive outcome in favor of Narendra Modi. I think it might get 61.50, but then I think post the election you should see it below 60. Dollar Russian ruble, I think that's a buy, notwithstanding that it's been downgraded by S&P to just one notch above junk. The IMF forecasts economic growth of 5.5% for sub-Saharan Africa this year, up from 4.9% last year, slightly more optimistic than the World Bank, which projects sub-Saharan Africa's output will grow 5.2% this year, partly driven by rising household spending. I attended the launch of the Regional Economic Outlook for Sub-Saharan Africa at the Serena yesterday. So they're expecting an acceleration, 4.9% in 2013 to about 5.5% this year. Acceleration reflects improved prospects in a large number of countries in the region, including most oil exporters and several low-income countries and fragile states. Economic activity in the region continues to be underpinned by large investments in infrastructure and mining and maturing investments. Solid near-term outlook, nonetheless subject to downside risks. External factors pose by far the more potent threats to the region as a whole, but domestic risks are more significant in some countries. They're making the point that growth in emerging markets could prove less supportive, saying that that high growth has supported growth in sub-Saharan Africa. Many countries in the region will be certain to face lower export demand, talking about the outlook for prices lower for copper and iron ore. They're saying that might well be a grim situation, talking of tighter global financial conditions as the stimulus in the US, the quantitative easing is being withdrawn, and positing that we could see a reversal of private capital flows, talking of rising fiscal imbalances in some countries, and particularly vulnerable are those countries that have relied heavily on portfolio inflows to finance their high fiscal and current account deficits, and then referring finally to security conditions, saying they remain difficult, talking about the CAR in South Sudan and Sahel belt, but saying particularly in countries with heightened reliance on portfolio flows to finance elevated financial and external current account deficits, there is need for policies focused on preserving stability if progress toward long-term development objectives is not to be derailed. Growth is projected to accelerate to about 5.5% in 2014, and saying growth accelerations are underpinned by improvement in the domestic political security situation in Mali, large investments in infrastructure and mining in the DRC and Liberia, maturing investments in Mozambique and Niger. Economic activity in South Africa is also expected to improve modestly. 1/3 of non-oil exports of the region now go to the BRICS, compared with less than 10% a decade ago, and that's the channel where we might import weakness from the emerging markets. Saying, in addition, important homegrown risks arise from fiscal vulnerabilities in a number of countries such as Ghana and Zambia. I've been speaking about both of those before, possible spillovers associated with the increased political instability and a worsening security situation in the Central African Republic and South Sudan. The main downside risk to this generally positive baseline scenario is the risk that growth in emerging markets might slow much more abruptly than currently envisaged. Countries in the region that were affected the most in the May 2013 and January 2014 emerging market turmoil were those with large imbalances, Ghana, Zambia, and other sources of domestic policy uncertainty, Nigeria and South Africa. Very interesting piece, lots of detail, lots of granularity, well worth having a look at the whole thing. There is much more detail on rich wrap-ups if you care to have a look. Of course, I'll put up a link of the session with Christine Lagarde at Mindspeak earlier this year. The South African all shares up 7.28% this year. However, South Africa's headline producer inflation accelerated to 8.2% year-on-year in March. Reserve Bank also warned about the current account deficit. Dollar-rand has softened a little bit to 10.65. I'll put up a 3-month chart. I still remain of the view we go to 10 before 11. Egyptian pound just below 7 at 699.57. The Egyptian stock market is Africa's best this year. It's up 23.56%. The Nigerian all shares down 3.16% this year, but has rallied 5.049% since the 19th of March. Basically trading at 11 times future earnings. That's compared with 15 for South Africa. Ghana's at 12. Nairobi's at 12, and so it's looking cheap when you compare it across the continent. The big other point to note is I think there's been an influx of money into sub-Saharan African equities. That's why you've seen this turn higher in Nigeria, Nairobi, and in South Africa. And I spoke about Ghana, which is going counter trend at the moment. It's up 6.59%, the all share this year, but has fallen 6.172% since the February 14, and I wrote about the fact that it's an open question whether Ghana's in the cockpit or whether the markets will simply elbow the government aside. And I think if you read that report by the IMF, they're signalling issues with Ghana as well. I met Mr. Francesco Confuorti a while back in Nairobi, and he's a very mercurial fellow. And you will gather from his answers to my questions. Mr. Confuorti's Advantage Financial is hosting a conference in Milan on May 12th, which I'm attending, details of which are on the front page of rich.co.ke. I asked him a number of questions. He's the president and CEO of Advantage Financial, started his career on Wall Street working for E.F. Hutton, director of the International Department of Oppenheimer & Co., CEO and director of Oppenheimer Italy, and a number of other high positions. But I asked him first to introduce his organization, and he said it's an independent investment company set up by a group of bankers with lengthy experience within financial markets, service institutions, corporations, and private clients, providing comprehensive solutions that span asset and risk management, consultancy, trading, and investment banking. His business spans a number of continents, and the conference that he's hosting in Milan is about East Africa in particular. Do have a look at the questions and answers, and a couple of rather cheeky ones from him too, but he's very mercurial. As you know, the car exploded outside the Pangani police station on April 23rd, and it seems that the cabinet secretary and the IG of police were being targeted, according to today's Star. David Kimaya, the Inspector General of Kenya's National Police, stressed that the vehicle could have caused huge damage had it exploded elsewhere. And then I came across this article in Foreign Affairs: Kenya's worst enemy, Nairobi's losing battle against militant Islam. Over the past several months, the Somali military, in cooperation with local, regional, and international forces, has managed to put the Islamist militant group Al-Shebaab on the run. Nearly every week there is a new report of another Somali town winning its liberation. Officials in Mogadishu have aimed to completely annihilate the group, and they predict that soon the Al-Qaeda-affiliated organization will no longer have any significant presence in their country. But if Al-Shabaab is losing its foothold in Somalia, it is working assiduously to gain another one next door. Kenya is on its way to becoming the world's next hotbed of extremism as a result of Al-Shabaab's active and growing presence there. And so far, the Kenyan government has been its own worst enemy in attempting to reverse this trend. And they're giving a lot of detail, the use of social media, talking groups' efforts have taken on a greater sense of urgency since its operational space in Somalia has been shrinking. Sectarian and terrorist incidents in Kenya are now on the rise. Attacks on Christians are commonplace and disquieting incidents such as a thwarted car bomb plot in Mombasa in March, which someone told me they knew the bomb was in there, but they couldn't find it, that it was a very sophisticated bomb, are likely precursors of far worse things to come, says Foreign Affairs. I hope not. Saying that the Kenya government's policies and actions have clearly aided Al-Shabaab's recruitment efforts. Militants have taken advantage of the central government's inability to control its border with Somalia. Al-Shabaab is slowly creating a lawless border region in Kenya akin to the Taliban-held land in Pakistan. Regional international officials are clearly worried. On March 24, UN envoy to Somalia, Nicholas K., warned that Al-Shabaab may be looking to move to Kenya as a result of the AMISOM offensive. One day later, President Kenyatta formally asked Washington for help in monitoring and securing its border with Somalia, and US Ambassador to Kenya Robert Godek confirmed the indefinite deployment of FBI agents to Kenya to assist in terrorism-related matters. Pretty hard-hitting. And I wrote about this recently when I said the recent bombings in Abuja and last year's attack on Westgate confirmed the potency of asymmetric risks, which are how I define Al-Shabaab. Put up a photograph of Westgate, of course, which was their great triumph last year. Then take you back to that car. The car was stopped at a checkpoint. The policeman had suspicions about the car, so they decided to take the suspects to the police station. They got into the car with them. Another patrol car followed them. That's when they arrived at the police station that they blew the car, said Mwenda Njoka, an Interior Ministry official. According to Capital Radio, they found another car, which was all loaded and to go. And going back to that article I wrote previously, and the comment that caught my attention was made by Abu Bakr Shekau, the Nigeria's Boko Haram leader, who said, "We are in your city," addressing Nigeria's President Goodluck Jonathan. That comment, in my view, could have been made by the Al-Shabaab. EcoBank recorded a 238% profit jump after a capital boost. Ehman is a friend and he's really beginning to push on now. Kenya shilling 86.85, come back firmer after briefly trading over 87. The Nairobi All Share at a further record. It's been a record-breaking streak lately. It's up 9.732% this year, and a record high. The NSE 20 is marginally down for the year, minus 0.6%. Kenya Orchards is the best performing stock at the Securities Exchange in 2014. It's up 120%. But its market cap is just shy of $1 million. So I think it's valuable to someone as an entry point. EABL has rallied 12.121% in April. Co-op Bank is plus 25.706% in 2014 and closed at an all-time high yesterday. Going to set another one today. KCB is just 1.5% below an all-time closing high of 50 from last year. Safaricom is at a record high for the fourth session at 1320. It's plus 21.65% in 2014. Home Africa reported its full-year earnings. Earnings per share down 28.571%. Revenues considerably higher. A lot of complexity in the earnings. But nevertheless, I think, the sell-off now is probably overdone. I wish you a wonderful weekend, and I appreciate the fact that you come and listen to my musings. Thank you.